This is a story about a dude named Lane. He moved to the mainland and bought one place to stay. And then one day he went try to rent them out. And then he became one real investor man.
A lot of investors come to me and they tell me that, hey, they found this cool turnkey rental at $50,000 that rents for $800, $900 a month. And I'm going to talk about some of the reasons why I have never done that. But before I do, make sure you guys go to simplepassivecashflow.com and sign up for the Hui Deal Pipeline Club so you can get access to the deals that I come across. So the first reason why you don't want to invest in these lower class properties is just think about it. And these are the properties that you're probably going to be in the D class area. And unless you are buying it where you just happen to be on the good side of the D class area, more times than not, it's going to be a bad investment at the end of the day. You're just going to have so much vacancy, so much repairs, so much trouble and headache with the tenants that it's just not going to make sense. Second, it's not going to be worth financing these properties. Yeah, you may not have enough money to get into real estate, and in that case, you probably shouldn't be doing real estate in this passive form. A lot of lenders won't lend under $50,000. And if you're going to be buying these lower priced properties, you're not going to be able to get that Fannie Mae, Freddie Mac financing. And the financing is really the reason why we're doing all this real estate, to get that leverage, that government subsidized leverage. I know a lot of people out there, these providers are trying to sell these lower price homes and they know that you can't finance it. And the trap there to be wary of is that they're trying to coax you into paying all cash for it because the property won't appraise for that. And many times that they can strong arm you into not doing a proper due diligence, which includes property inspection, title research, and understanding the market.
When I got smart and sold my primary residence to start investing in investments that actually made sense, I needed a place to diversify quickly as opposed to some money market or some high reward checking account. Let's face it, turnkey rentals are cool and syndications are great, but they don't come around often. I stumbled upon the American Home Preservation. The owner, George Newmary, once apartment syndicator too, is now sponsoring the podcast. His fund cuts the middleman out to crowdfund the solution to the mortgage crisis in America. They are empowering you to fund the purchase of distressed mortgages and earn returns that smoke any other passive fund. If you find something else better out there, let me know. Oh yeah, they work with families to keep them in their home after buying the underwater note at a huge discount. It's an opportunity to make an impact on families and communities while earning returns. Start investing with as little as $100 in investinahp.com. If you want the free Burn Zone book, please send me an email at lane@simplepassivecashflow.com.
The third reason, on these lower priced properties, there's really no exit strategy because no one will really want to buy these things at the end of the day. I mean, they're in the D-class area and you're thinking about an economically mobile family moving up. A lot of times they're trying to get out of the D-class area and they want to move to the C- area. Then no one will really want to buy it other than another sucker investor, which is you if you're really considering a lower class property like this. The counterpoint to all this is if you're going to do a D-class property, you've got to find the right one in the right area, which is hard to find, which is why you need third-party boots in the ground to be able to advise you and be able to represent you. Many times these providers or even investors, you'll see these lists of big portfolio properties. Most times than not, this is just the crap they're just trying to unload on some unsuspecting, unsophisticated investor who just happens to stumble upon it and thinks it's the best thing since sliced bread because they only have to put 40 grand down to get $800 rent. What I tell people is if you're a novice investor, you need to stay away from this stuff and get your feet wet with more of a C+, B minus turnkey rental. Yeah, on paper, it looks like you're not cash flowing or getting as great returns, but I think at the end of the day, when you factor in what actually happens in real life and what actually happens on your profit and loss statements, I think you'll be better off down that route. The other month I had this fourplex that was a D class, and some people were like, you always talk about not going to the D class, but that particular one was actually a pretty good deal because it was in that great area in the D class neighborhood. And when you can pick up properties at $30,000 a unit, this was a fourplex that will rent for $750 a month. I mean, the cash flow on that is crazy and it justifies the additional risk. Again, the more risk you take, the way more reward you get. And to close things out, I just wanted to bring up a point that I've been hearing from investors lately. This is a discussion on excuses. Now people talk about, the market cycle is hot now, the interest rates might go up or down, the governor in my local area or the area I'm looking to invest is going to change, or, these are just excuses. This stuff has been happening since the beginning of time. Oh, I don't want to invest because Y2K, or because of the Trump election, or because 9/11. It's just all excuses not to get in. Sophisticated investors who are buying with cash flow know that they can always make money with the investments independent of the aforementioned excuses. Buying right with the numbers makes sense, and considering the downside with a SWOT analysis, strengths, weaknesses, opportunities, and threats, you need to figure out what your cash flow buffer is. If the market goes down or one of these things happen, are you still going to be able to hold on to the property? And if you can hold on to the property, you're going to come out of it much stronger than everybody else. And as we always say, the theory is with these rentals is when things go bad, your C-class, B- class properties will actually do much better because everybody's going out of the single family homes because they're all getting kicked out, and they're going to these middle class rental properties. What I always tell people is if you're cool working till you're 65 years old, then that's great. But if you want to take less risks, be a little bit more involved, and cut your time getting to financial independence day, then you just need to suck it up and do it and quit making these excuses. Alright, we'll see you guys next time. Bye!
This website offers very general information concerning real estate for investment purposes. Every investor situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.